So why did FTX collapse and what does this mean for cryptocurrencies? First, we need to know about these two businesses. So FTX was founded by Sam Bankman-Fried and Gary Wang in 2019. It was set up as a crypto exchange. Alameda Research was also set up by Sam Bankman-Fried, and this was a quantitative trading firm specializing in market making, that is, matching sellers to buyers for assets, mainly in their case crypto. Now the next thing you need to remember for later is what we call margin trading. Margin trading is where an investor or an investment group borrows money from a broker in order to buy an asset. To secure this margin, obviously we have the asset that the investor is buying, but they also have to put up collateral so that this trade can go through. This creates a maintenance margin, which is the amount of collateral that the investor has to keep in place while they hold this trade. If they don't have enough collateral, this cues what's called a margin call, whereby the broker can start selling the investor's assets in order to get up to the maintenance margin. So FTX were allowing investors to use margin trading, allowing them to borrow money in order to invest in cryptocurrencies. But the problem begins with the closeness of relationship between FTX and Alameda, because both of these organizations were controlled by Bankman-Fried, and he allowed basically a massive over-leveraging. So he allowed Alameda to borrow around $2 billion for crypto trading. And there was a whole load of accounting magic going on here, where Alameda was saying that they had assets and collateral of $60 billion, and that could finance then this borrowed money from FTX. But overall, these two businesses were far closer connected than what Bankman-Fried wanted people to think. And this all came to a head in around springtime when we had a big crash in the crypto market. So all of the trading and all of the assets that Alameda were holding was suddenly worth less or crashed or just disappeared. For example, the stablecoin Terra crashed, which Alameda held a significant position within. This all led to Alameda hemorrhaging money and relying more on FTX in order to stay financially viable. Then the market began to get wind of what was going on, and they became less and less confident in FTX. Because of this, FTX's own coin, FTT, started to see a crash. And this problem was confounded when Changpeng Zhao, founder of Binance, which is a rival crypto exchange, started to offload his position in FTT. Ironically, Zhao had acquired FTT as a payout for his 25% stake in FTX. And it was Zhao's commitment to selling FTT on the free market which led to the crypto coin crashing. That then led to FTX becoming massively unstable, and moreover, the money that Alameda had been getting had been increasing. So at this point in time, Alameda had around $8 billion of clients' funds from FTX. Investors who were using FTX started to panic and started to withdraw their funds. And this then spirals to the collapse of FTX as they're unable to meet the request to cash out. Bankman-Fried then sends a tweet saying that he's declaring FTX as bankrupt. To make matters worse, when lawyers started to review FTX, they found out that there was around $1 to $2 billion worth of assets that were just missing. They were unaccounted for. And there was another level to this, which was FTX's aggressive marketing. Now, do you remember the beginning of the video where we said Alameda Group, they were a market maker. So they made their money by connecting buyers and sellers of crypto. The problem was, as time progressed, there was far less profit to be made in this industry because new entrants entered and competed with Alameda. So Bankman-Fried thought what would be a good idea is if we got a load more clients into FTX, bring in their money into the platform, they could then redivert that down to Alameda in order for them to take on riskier strategies and riskier approaches to maintain their profit margin. And some of the ways they did this was by sponsoring large events, but also by giving money to celebrities and also YouTubers and finance YouTubers specifically to advertise the platform. And this is why some of your favorite YouTubers have had to issue apology videos recently, because they advertised on behalf of FTX. Unfortunately, your favorite YouTuber, moi, didn't get offered anybody from FTX, so there's no apology that's needed here. But what are the implications of FTX's crash on the market for crypto? Well, I think one thing this highlights is the massive holes in corporate structure and accounting which allowed this scandal to happen. And in my own opinion, if something like this happened in a normal business that was normally regulated, then I think this would be a far bigger scandal and make the news to a far bigger extent than it is today. I also think we're going to see a massive acceleration of the pushes towards regulating crypto and crypto exchanges. For example, the European Union's Markets in Crypto Assets Bill. This would bring in a load of regulatory framework for businesses offering cryptocurrencies. Now, the bill is waiting final approval by the European Parliament, but I expect it to be accelerated in its implementation. Similarly, around the world, we're likely going to see further pushes to regulate crypto, most notably in the US, despite their rather cagey approach up until now. So do you guys invest in crypto? Why do you? Why don't you? I'll be interested to hear down below. And until the next time, bye-bye.